Hey, what's going on? It's Brendan King from Brendan King Group at Real, and it is your Monday market update for August 11th through August 17th. Let's check it out. So on average, 98% of list price was received. Last week that was at 99, so we're starting to see that downward pressure show up in the data now. Like we said, real estate's a 30 to 60 day period, so data tends to be a lagging indicator or something that happens usually behind the actual reality that's happening. Average days on market, 22 days, which is the same as last week. Again, one of those funny numbers where I pulled a 89138 the other day, and homes over $1 million are averaging about 50 to 60 days on the market right now. So it all depends on what price point. Weeks of supply went down this week from 22.6 last week to 18.2 weeks of supply this week. What does that mean? So obviously with 18.2 weeks and it going down, does that mean inventory as far as active listings went down? No, it actually continued to go up, but we just had a little higher sales and a little less homes come on the market. The school year just started. Football's starting. People don't want to leave their house when football starts. But no, to be honest, inventory still, or I should say the listings still went up, just not by as much as it had been the last couple months and weeks. Excuse me. So let's go back to the data. So new inventory, 879 homes were added to the market compared to 964 last week. Active listings went up again to 7,665 homes. Last week, that was at 7,443 homes that were active listings. So we went up a little over 200 homes. Last year, for perspective, we were at 3,217. So we've 1.5 times the inventory pretty easily. Weekly sales, 421 homes sold last week, or I should say last week compared to the week before of 330. And under contract, 599 homes, just a little more than the prior week of 574. The average weekly sales price was $519,244. And the most expensive home sold was $3.4 million. What's going on? It depends on the price point. It depends on the area of town. We're definitely shifting and have shifted for a little bit now, and now it's just it's a little more apparent. On a lot of reports now, you see it no longer says seller's market. It says neutral. And in some price points, it's a buyer's market. If you're a buyer right now, you've got choices. You had one choice for 2 years. Now you've got 7 choices, 8 choices. So on a buyer's side, you've got some opportunity here. You could ask for closing costs. You could absolutely be a little more aggressive on price when you put in an offer. That's definitely something you can do right now as a buyer. It's a different world. Before, you had no choice. Whatever one home was on the market, that's what you were stuck with, and you had to fight 20 people to get it. Now, tides have turned, and you've got the ability now to put in a little lower offer on some homes and be the only offer and ask for closing costs. So, wow, how things change, and you hear about it all the time. Things change fast, and it's the same in the stock market as it is in the housing market. Right now, at some price points, it's a heavy buyer's market, and some price points are just crossing into that world. But if you're looking for a new home right now, I read an article yesterday that new homes, for the first time in a long time, some new homes are actually selling for less than a resale on the same price per same square footage, same zip code, same everything. You have new homes in some areas selling for less than resale. Why is that? Builders are quicker to get rid of inventory than sellers who are emotional. A builder looks at data, they see what's coming, and they act accordingly. So some builders right now are acting accordingly. They're getting rid of inventory as fast as they can and resetting themselves. So on the builder side and on the new home side, you've got some really good chances for great prices, money toward upgrades, possible closing costs, maybe an interest rate buy down. What does that mean? An interest rate buy down means, in this case, the builder, possibly you could ask for them to pay down your interest rate by 0.5%, 0.75%. Some of them are just offering it without you asking. Same with sellers. I just saw a seller $10,000 buy down. We got one of our buyers. They wanted to offer closing costs. Our client wanted a interest rate buy down. And that's something, you have to discuss with your lender. That's not always the best choice, depending on your price point and your affordability. If you can afford the higher interest rate, it may be better to take that cash in closing costs or a reduced price, because you could always refi down the road. Carly on our team mentioned something the other day. You marry the house, but you date the interest rate. I thought that was hilarious and a very good way to say it. In some chances or situations, maybe marrying the house and dating the interest rate is the better choice. And in other situations, actually buying down the interest rate may be the better choice if you can't afford the home unless you do that, because affordability is important. You don't want to say, I'll just get the house and then pay a price that you can't technically afford. You want to be able to afford it. So just some advice from my end of what I'm seeing. But you know what? We're definitely seeing change. There's definitely change. The change is here. The change is past already. On the seller side, think about the last 10 years. If you've been in your house for 10 years, every single year you've made money. So this little change in the market doesn't mean you're not going to make money. It doesn't reset you to 2012 or 13. It puts you in a situation where, are you going to get a little less than you did 3 months ago? Absolutely. But are you still going to get a ton of equity and maybe on the buy side be a little more aggressive? You may be able to make up the difference on the home you're buying for what you would have made on the selling side. So I wouldn't be too nervous about that end. You're still going to sell. You just need to be intelligent about your pricing. You're not going to get probably what the last seller got in your neighborhood, but that's our job. We can analyze the scenario, analyze the situation, and help you make that determination as to what you should do and where you're going and how much you should pay on the new neighborhood. Don't forget, as always, you can text MARKET to 702-553-1955. You can get on our list. We'll send you the report every week or 2 weeks. It depends. Lately, we've been waiting for 2 reports in a row just because things were changing so fast. We wanted to do some comparative analysis between the 2 weeks. But definitely get on the list. We'll text you either way. We'll let you know what's going on. And as always, we'll see you next time. Have a good one.